Good afternoon. This is Ken Long from Tortoise Capital with a review of the weekend trading plan for November 30th, 2019. We have a market that is in bullish, quiet conditions. On an annual basis, using weekly RSI 14, we're in overbought conditions at 76 out of 100. On a short-term basis, using 10-day NDX, we're also overbought with a score of 80 out of 100. Looking at the market mosaic, price with respect to the 200-day moving average has about an 8% cushion from sideways, with the reading of white bullish of 10.18%. The 5-day slope of the 50 is also white bullish at 0.57, so it slowed down a little bit this week. ADX just went into the strong trending region at 26.7 with bulls in charge. ATR percentage has dropped down to 0.64%, which puts it into quiet. The risk index is the 30-period moving average of the VIX divided by the 10-period. Right now that's got a value of 1.00, which is right on the boundary conditions of risk on. If you take the z-score of that by comparing it against the standard deviation of the last 5,000 trading days, comes in with a z-score of minus 0.07. You can see it just tipping into the red here. Blended monthly rebalancing completed at the end of this week. The new holdings are ETF 13 is holding the Qs, the Russell 2000 and the US large caps. The ETF 22 and 32 portfolios are holding the NASDAQ, the XLI, the industrials, spiders, and XLY, the consumer discretionary. Next re-evaluation is on or about 1 January. Theoretical exposure in ETF 2 is 100%. The model portfolio is at 100%. And all we do on this week is tighten up a few of the stops. Zooming in on the 13 and 32 ETF portfolios right now, again you can see the NASDAQ, the small caps and the large caps, industrials, technology, and consumer discretionary. Next up, looking at the ETF Max, the leaders continued to lead, and that's solar energy, Greece, India, aerospace and defense, Spain, small cap healthcare, and so on. The golden dragons are still looking pretty good. Although it may be cooling off, because what we notice is that it's white on a 3-month and green on a 6-month. We are actually looking for things that look like this India infrastructure, which is green on 3-month and white on 6-month. Green meaning that it's exceptionally strong compared to the 1,500 or so ETFs in the database. White meaning that it's above average. It's between average and +1 standard deviation. Looking at the market health check, all 3 of the regression channels are up at about a 45-degree angle. Prices in the floodplain above the dragon. The dragon is on the edge of the river. Everything is sloping up. It's a bull quiet market. So the upside is easy to see. The downside, I placed the first support level at 178, followed by 176, which would be the Bollinger Band mean right here at the red line at 177. 175 to me is the fail-safe, or the final line of defense here, maintaining the 3rd level of support for this move up. But things look very strong here. I mean, we're overbought and we can stay overbought for long periods of time. Percent price oscillator is basically flat here because of this quiet grinding upward move. You can see we're maintaining a comfortable distance above the 200 period moving average. And so to the upside, the technical move still is up around 190. That would be a 5% move. And the support levels, again, 176, or 178, 176, 175. These horizontal red lines are the support levels that once were resistance levels, and they would be price targets on the way down if we get a price break. You can see that the slope of the 30 period regression line, which is a sine wave looking thing, is starting to flatten out here. That would be a very favorable sign, because then we'd have a series of higher lows on the regression line slope. Looking at ETF2 regional report, everything's on a buy. EFA just went in front of the S&P. EFA at 74, slightly better than the S&P at 73. Inside the U.S., it's the rankings are technology, small caps, large caps, mid caps. The two strongest sectors in the world right now, technology and U.S. small caps, followed by the two weakest are Latin America and Asia less Japan. Inside the sector spiders, you can see the strength is in industrials, consumer discretionary, and healthcare. World market model, everything in the U.S. is above average. The small caps, growth and value are exceptionally strong. Japan and Asia less Japan above average. China really leading the way. Everything Europe is above average, with Germany and Spain leading the way. Emerging markets are above average, but everything else in the Western Hemisphere slightly below average. ETF top 30 for your reference. And the Dow 30, looking at it through the same lens, Cisco and IBM, the two weakest, the two strongest, Boeing and Nike. The emerging strength is in these four, 3M, American Express, Verizon, or Visa, and General Electric, since they are green on relative strength and then white on consistency. Shifting to the daily report, got a handful of channeling and overreaction signals, got a 5DD in utilities, triple screen signals in General Electric, ExxonMobil with a 551W and IBM, and a handful of good candidates in the auto framer. See EPP tests out on channeling as well. You can see how the volatility really dried up this week during the holiday week, and the strength of the move in ADX indicating a strongly trending market in this bull quiet market. A handful of dojis. I have ExxonMobil and Pfizer and Verizon all firing on the RSI2 value. Four good candidates in the auto framer, and then the top five max pain range compressions: Intel, Boeing, Cisco, IBM, and General Electric. Got a couple triple screens here with GE and ExxonMobil, and four symbols that test out better than 2 to 1 on the auto framer. So a lot of good targets. ETF 30, 5 very good targets in the top 5 max pain range compressions, all test out better than 2 to 1 on the auto framer, as do EPP and ILF. Firing on RSI2, we have XLU utilities, and EPP Asia less Japan, again, which is also that channeling signal, and Energy XLE at a score of 8. 5DD and XLU, it's a channeling and an overreaction. It's a max pain range compression, test up 2.8 to 1. Auto framer for your working up your mechanical entries. Market mosaic. You can see we got a both the linear and then the polynomial regression lines are both uniformly up and expanding. The slope of the 30-period regression line is getting ready to roll over and cross up again. That'll be very favorable. And you can see how the volatility has just decayed enormously. The rest are statistics for you. This confluence right here of the regression line slopes all at the top of the one standard deviation above their 6-month norm puts the market at a turning point. Are we going to continue to quietly ride this higher, or are we going to come back and test at 175-ish? And that's everything from Tortoise Capital. Hope you had a fantastic Thanksgiving. And we'll see you in the chat room and on the webinar tomorrow night. So take good care.